Helloa, helloa, helloa. How's everybody doing? I hope we're all having a great day. This is 50 pips rocking and rolling, 12th, 10th, 2014. Not making any trade calls or recommendations because you and only you are responsible for the trades you may decide to take. The fact you're listening to this means you've read, you understand, you accept all the disclosures, disclaimers on blog, understanding that we're just performing some technical analysis in a learning context for educational purposes only. So I hope everybody's having an awesome weekend. Everybody's had an awesome weekend wherever you may be. So what to look at going into the week? Now, we had some very interesting moves towards the end of last week, and it's going to be very interesting to see how we open on Sunday night. I mean, this week in terms of data, we do have some kind of China data out on Monday. Keep in mind that we've got some bank holidays, but really we've got Tuesday is going to be pretty interesting because we got the CPI out of the UK, so that's clearly going to be a mover on sterling, and we've got the ZEW out of Europe, so that's going to be the main focus. Then on Wednesday, we still have the CPIs out of China. We've got a bunch of data out of UK again, with the claimage count, unemployment rate, and then we do have retail sales out of the US. We've got Draghi speaking. We've got some stuff out of New Zealand. So there is some action. Wednesday is going to be a decent day. Then on Thursday, we got some CAD data, unemployment claims out of the US with Philly Fed, and then we go into Friday basically with some more Canadian data and US data. I mean, basically, I think the biggest one of the most interesting pairs or currencies in terms of the data front will probably be the pound, right? So let's start looking at these charts and see what we can expect to see. Now, starting off with the pound, since we talked about the pound, basically, what did we say? We said that we were hovering here, right, in terms of cable, and that basically to expect very choppy trading, and that price, even though it was this pretty wide range, all the way from 163 into these 159.50s, right, 350 pips, we said don't get confused by velocity of move inside range, because it can move very quickly inside this range and it doesn't really mean an awful lot, right? The big fight here is between the longs trying to base this ahead of the 59.50s. You see the level was protected very aggressively. You've got this confluence of this 100 and 200 moving averages on the weekly holding support, and you have the shorts that are trying to keep pressure on at this gap down zone. Remember, we had the referendum, Scottish referendum and everything. We did have some more news from UK YIP on Friday, which basically the market didn't really like. But as long as we hold in here, right, it's going to be very difficult for this to make a sustained move. So what to look at, again, is look at the extremes as interesting opportunities. So, looking for holds at lows, move towards lows to possibly get long, move holds at highs or failures at highs to get short. But really, it's a big range trade. Now, if we do break below the 159.50, we get a daily close below the 159.50, then I would expect to see a pretty rapid acceleration to try and take a stab back down into those 157.20s and possibly lowers. But keep in mind, again, we're talking about a daily close or weekly close even. Don't get fooled by little moves below that don't get any traction, right? This is going to be a very important level. And equally, if we start to get daily closes above these 163s, then I would expect the 165, this higher level, to come relatively quickly. So this 300 pip range or 350 pip range here, a daily close outside, I would expect to see a continuation in the direction of the close, either to the upside or the downside, possible 200, 250 pips to come relatively quick if we actually break out of this, right? Now, since we looked at cable, let's look at euro. What's going on euro? Euro, equal thing, right? What have we been saying now for a number of weeks? We said do not get confused about velocity of move inside range. 127.80s, 125s. The bottom is really 124.60s, but still, as long as we stay inside this shaded area, don't get confused about velocity of move. Unless we break outside, we're not going to see the next big move, the next 300-400 pip move. So right here, we've had a lot of wheeling and dealing. What we said last Sunday, similar to cable, that you have to respect the hold of these round numbers, and what we would have expected to see in the week was a bounce towards the upside of the range, which that's what we got on cable, that's what we got on euro. Now we're pretty much closing here. Actually, you see so again, unless we close outside, there's not a lot to do. If we start to get a daily or weekly close below the 125, then I would expect euro to start to take a stab and probably accelerate very aggressively to try and move towards the low end of the 20s. Again, if we get a close above 127.80s, I would expect 129s, 130s to possibly attract very, very quickly. Now, in terms of action here, if you flip over, this is a weekly chart again. If you flick over to a daily, what's going to be interesting into the open, since we close kind of close to lows, is are we going to take a stab to the downside? Are we going to try and gap down? Now, if we don't gap down, if we don't try and take a stab to the downside here and we hold this whole level, then expect still to see some pressure to move back to the upside. But right here, it looks like it's trying to base. It doesn't really look that like the 125 is under a whole lot of threat. We'll have to see how the equities open early in the week. But again, keep in mind, this is probably very interesting support. And, you know, that's back on the daily. If you look at that, I suspect you probably, I think we see exactly the same kind of action on cable, right? You see the same kind of things happening. If you move from that weekly onto the daily, we had this press lower. This is a level where the market tried to catch it before. Then we had that exhaustive move that then couldn't get any traction. You see the market's trying to catch it again. Right now, let me check. Cable's trading the market now 160.70, so it's pretty much where we left off. So keep in mind, you have to respect the support here. And if we open the day before below, we might try and take stab lower. But if we hold above, pressure will probably be to try and take some stabs to the upside. So that's what I'm looking at for euro and cable going into the week. I mean, there are a lot of interesting things where you could get some acceleration. Really, it's all about the dollar, right? That you could see on the yen. We're talking about this range and saying there's not a lot of edge as long as we're trading inside this blue shaded area. But once we broke outside, right, we couldn't hold it. We came back in. We put in a series of lower highs. We said, you know, again, fundamentally long term, we'd still expect the yen to trade higher this year, you know, try and take a stab towards 115, 117, etc. But it would be healthy to see some kind of retracement. Don't get suckered in at buying highs. And the fact that we got this break to the downside here, then we made a lower high, led us to believe that the odds were probably in favor, or at least we were looking to trade the short side for a move back down, break back down, and move towards possibly these 106s. So watch this very early in the week. It looks like there's one, I heard, you know, a lot of people talking about the 107.50 in terms of some kind of option barrier. Clearly, it's going to be interesting. If we start to break down, then the 107 will probably come quick, and then it's all going to be a question of how we behave there. But clearly, there's a potential of a move back down towards this whole zone on yen. And again, it's pretty much across the board, right? You can see this on EJ. You know, we're right back down into this really, really important support. You know, are we going to catch a bid here like we have a lot of times in the past and move back in, or are we going to break down, try and take a stab at these 133s? This should be pretty good support. There's still more support further to the downside if we break lower. I mean, this has been holding, so the start of the week could be pretty choppy. But again, as we said, you see we had our shaded area similar to euro and cable. Don't get confused by velocity of move inside range. It can move very quickly. And, you know, again, you can see this pattern across the board. Swissy, very interesting. You know, we talked about this trend line here. We're on a monthly, and we said don't get suckered in buying highs. You know, if anything, it would be healthy to see some kind of a correction or sometimes some kind of a move back down if we can't hold, or at least if we can't close the weekly back above this line, right, which was the 96.00. And you see that it's struggling a bit here, right? It could be time for a pause. It didn't close negative, but it could be time for a pause. If you look at it on the weekly, you know, there were very interesting shorting opportunities up there on the 4 hour with the gap up on the Sunday open, then a beautiful chance to get back short to play the downside. So here I think on this whole Swissy, it's also, you know, if we start to hold below these 106s, then we could see some kind of move to try and take a stab back down into the 93s, 94 level. But clearly it looks like it may be time for some kind of move back down. And again, it's the same chart across the board. You can look at it on CAD, right? We talked about the monthly. We said that the upside of the channel would likely attract, but don't get carried away at the 1280 80s. You know, if it can't close above, it would be healthy to see some kind of retracement, even though it stays in a bullish configuration. And here it's very interesting. If you drop down to not only a weekly, even though the weekly closed at highs, if you go back on a daily or on a 4 hour, you can see the same kind of pattern, right? Yeah, you know, it's inverse to euro, inverse to cable. We've broken higher, then we come back here and you see it's just the opposite, right? This level is being defended. So if we can break above here early in the week, we'll look to this potentially to try and take a very aggressive stab to the upside of those highs. But at low, as long as it stays offered, as long as it stays below here, well, then probably the risk is for some kind of pressure to the downside and some kind of healthy correction here. And again, it's the same chart across the board. Kiwi, what's happening on Kiwi? Kiwi's trying to base here. We had the shaded area here. We said much to do about nothing as long as we stayed inside the shaded area. It tried to break above here. Then it put in a failure at highs, negative close, retraced all the way back down. But as long as we're inside this zone, again, is it trying to base? Yes. Is it trying to get some traction to the upside? Yes. Well, you know, with the equity moves on Thursday, Friday, everything kind of there's a bit of a little setback. So we'll have to see how we open. Really, Monday, Tuesday is going to be key. You know, are these basing or not? You know, are Euro, Cable, Aussie, Kiwi, where's the Aussie chart trying to base, and are they ultimately going to get a bit of a healthy retracement to the upside, or are they going to stay heavy? So it's all about the recent lows, Euro, Cable, Aussie, Kiwi. It's all about the recent highs on Swissy, on CAD, right? In terms of gold, basically very nice move. As we said, you know, do not be the last guy shorting the lows as we move back down into the box, right? Our whatever this color is, magenta or purple or fuchsia, whatever you want to call it. As long as we get in the box, you know, the odds are to look for some kind of a bounce. You know, you want to get aggressively short. There's, you know, we don't like getting short at lows or long at highs or playing those kind of trades, but you want to see it close below the box, not starting to hold inside. And what we said here, the odds were for a move back towards those 1230s, 1250s, and we got a nice little bounce. So I would expect here to see gold to continue to try and take a stab higher. Then it's really all going to be about how we behave right here, right? As long as the sellers come back in, then we could see another stab back down. But if we start to get daily closes above the 1250, this whole breakdown zone, then, you know, 1300 will not be out of the question. Right now, in terms of broader range, we're still in this 1300, 1250, 1200, unless we get a lot of downside below or closes below the box. Really, we're still inside this range. So let's see what happens. And, you know, speaking of the equities, right, we talked about, again, it's, you know, do your homework. How many times we talked about it this year? The moves on FOMC, you know, 8 times out of 10, it's always been a fade. You know, those moves very rarely held. Pretty much all the plays, all these moves we've had, whether it's been to the upside or the downside, they haven't managed to hold in the following days, right? And on that FOMC, we got a very nice move to the upside, very nice areas to short, back down to play the healthy correction back into the 200 DMA. Right here, going into the week, says very, very interesting, right? Are we going to see markets open down and keep the pressure to the downside? And then what we would be looking in this case, right, if we break back below these lows, we'd be looking at that whole 1840s, 1850s area as a next target to the downside. However, the healthier move here would be to see some kind of wheeling and dealing here, whether we take out the lows or no, whether we take traction, get traction or not. It would be healthy to see some kind of a little correction back up. I wouldn't rule out a bounce back into the 1950s. The way I look at this is if we open heavy and it starts to hold heavy on Monday, then it will probably try and accelerate down early in the week. If it can't get traction quickly on Monday, Tuesday, then I would expect to see that bounce, you know, maybe 30 point, 40 point bounce here. And, you know, equally on the NASDAQ, you can see the NASDAQ still hasn't made it to that 200. So let's see how it reacts at those lows. You know, clearly below those lows, then that 200 DMA is going to attract equally to the ES. You know, if it can't get to traction, look for a bit of a healthy bounce. But again, finally, we're starting to see some more interesting moves in the market. The market is moving. Keep in mind, again, really with these kind of closes on Friday, the Monday open and the beginning flows are going to be really, really interesting to keep an eye out on how the market's going to react. So there you go. There's some of the levels I'm looking at. There's some of the charts. We'll start posting them on the blog. Have an excellent rest of the weekend wherever you may be, whatever you may be doing. See you guys for London Open. Thanks for listening. Have an awesome one. Bye-bye, guys.